Good afternoon, everybody. Good afternoon. I hope that you can now hear me. Hope that you can also see the slides. I'm not entirely sure what happened there, but the important thing is we're all here, and I'm hoping that, as I said, you can see the slides and you can hear my voice. Here we are for Monday Market Matters for 29th of July 2024, and our main education element will be on trading the news. So a fascinating topic to talk about, something that we could cover for the whole week. Okay, there's lots of different ways to engage with trading the news, but we will talk a little bit more about that in depth in the future slides. Just a reminder that here we are. That it's great for you to be here. Just a reminder that this is our last session before our summer break, and actually, what will happen is we'll be returning on Monday, the 2nd of September. So, just a little reminder of that here before we begin. So. Let's talk about what we're going to cover today. As always, we'll do a little bit of intro and we'll talk a little bit about the news. And we've got a really bumper week ahead for us in terms of the news events we've got going on. But as I said, our main educational thrust will be about trading the news. So we'll talk about, why do people trade the news? What is it that they find so fascinating about it? What is it that we need to be aware of as a trader? And, how can we best trade the news? And what I'll do is I will just share a simple setup. There's lots of different ways to trade the news. I'm just going to share with a very, very simple setup that you can take away and you can start to utilize in your own engagements with trading news events. And then, as always, we'll switch across to live markets and have a look at how markets are opening up for the start of, as I said, what will be a very busy week and a week that has an awful lot of formal news coming down the pipe. But more of that later. I appreciate we always have some new people joining us every week. So Monday Market Matters is the ActivTrades regular webinar series, which is basically aimed to help traders start the week in the right frame as we prepare for the opening of the US markets in about 25 minutes time. So normally, apart from when on our summer break, we have at Monday, 2:00 London time, we always take a look at, what is the major news that we want to be aware of for the coming week ahead. The main element will be on education, a piece that can help you build your trading knowledge, okay, that you can take away and utilize in your own trading. And as always, we'll have a look at some of the ActivTrades platforms and tools that you have available to you as an ActivTrades client. And then we always finish with a look at the live markets at the start of the US session. So there's always plenty to talk about, always plenty to cover. We always want to make these sessions as useful and as helpful to yourselves as we possibly can. And as you hear me say every week, if there are particular educational topics that you'd like to see us include, or there's something that you'd particularly like us to help explain, then we're always happy to take that feedback on board. You can either drop it in the chat box here or just send a message to the English desk at ActivTrades.com and just with your feedback and comments and thoughts, and we'll try and build that into our plan. As always, as I said, we want these sessions to be as beneficial and useful to you as possible. So without any further ado, let us start Monday Market Matters with taking a little look at the news. And as I said, this week is a very, very busy week. Okay, plenty of news coming down the pipe for us. Okay, as traders and analysts and investors to basically engage with. Those of you who join us every week will know that I make no apology when I state that if you are new to the trading journey, I would not expect you to be able to analyze the news, but I would expect you to know when the news is coming out, because invariably those major news events is what induces volatility into the market, and volatility is a double-edged sword. Right? When you're on the right side of it, it's great. When you're on the wrong side of it, it can make trading challenging. So it is imperative that you know when that data is coming out, and you can find out that data on an economic calendar. There is an economic calendar on the ActivTrades website and also on other parts of the internet, so there's no excuse not to be able to do it. There is also a fantastic weekly outlook that is sent out by the ActivTrades team of analysts, so make sure that you're signed up to that and you're availing yourself of all of that particular data. So As I said, this week is a particularly chunky week, okay? We're ending July, we're going into August. Generally, what tends to happen is, the sort of first week or so of August is busy because everybody wants to get the data out, and then, everybody sort of slopes away for their holidays. So it makes this particular period quite a busy one. So today, there's no real major news coming out in terms of economic formal calendar news. But what we do have at this week, which adds to that kind of, let's say, that intensity, is that there are an awful lot of companies with their earning reports this week. And that is, let's say, that's like added another layer of complexity this week in terms of the amount of data that traders will be seeing coming across the wires from that. So it's important to know those, especially when we have some of the big Mag 7 data is coming out. So I think we've got sort of Microsoft tomorrow, Meta on Wednesday, I think it's Apple and Amazon on Thursday. Those people are going to be looking at those Mag 7 stocks as the real kind of bellwether of the market and the economy overall, rightly or wrongly. And so you would do well to make sure that you're aware of what that data is coming out, because it will have an impact certainly on the kind of big major American indices, and also on the sort of the overall risk sentiment that we see traders display off the back of that. But we also have, as I said, quite a lot of formal economic data. So tomorrow we've got, Tuesday we've got basically things that we're interested in are like German preliminary CPI data, and in America we've got the sort of consumer confidence and the JOLTS job openings data. Wednesday is a particularly busy day because we've got Australian CPI data coming out. We've got Chinese manufacturing PMIs. We're also expecting to have a Bank of Japan monetary policy statement, which traders will be taking an interest in. We also have in Europe, we have kind of core CPI, the flash estimates for that. And in the Wednesday afternoon in America, we've got the non-farm employment change, the ADP numbers. We've got Canadian GDP numbers. We also have pending home sales, and we also have the FOMC statement. And people will be interested to hear what that statement is and whether there's, the kind of the implication that would have upon a September interest rate cut, which is where most people are sort of focusing their sort of efforts and analysis towards. So as I said, Wednesday is a very busy day. Thursday, we have both closer to home. We have the UK. We have our own monetary policy bank rate, and this is where we are expecting to see the UK cut interest rates from 5.25% down to 5%. That will be the start, okay, of let's say a new trajectory, and so traders will be once again keenly aware to see how that particularly plays out. And then in the US in the afternoon, we've got unemployment claims and ISM manufacturing PMIs, and then on Friday we've got Swiss CPI, and also we have American non-farm payroll numbers, the American unemployment rate. So, as I said, there's an awful lot of data coming out this week, and that doesn't, as I said, doesn't even include the huge swathe of earnings reports that we are going to see from the US and from some European companies as well. So this is going to be an interesting week. So, as I said, make sure you are on top of the economic calendar. Make sure you understand when that data is coming out, because it can have an impact upon how markets play. And so, good professional traders will always be on top of understanding that news flow and finding a way to use it to mitigate risks and also to create opportunities. So I suppose with all of that economic data we've got coming out this week, it is probably a perfectly timed week for us to talk about trading the news as our main educational element. Now, trading news is a very popular way for traders to engage with markets. However, many people do it from the wrong place. They're kind of uneducated, or they have done very little in the way of preparation, and that's what can sometimes make it a challenging endeavor. So what we know, or rather to sort of explain to the kind of traders at the start of their journey, is that most financial markets will move because of new news and economic data releases being entered into the market. Okay, this is what traders are looking for and they're interested in, because those events, well, they can lead to volatile short-term movements in markets. And therefore, that's why many traders are attracted to trading around such news events. And so today what we'll do is we'll discuss, why traders do it, how traders do it, what you need to be aware of. And also I'll share with you just one very kind of simple mechanical way that you might be able to take advantage of these situations. So trading news is, as I said, a very popular endeavor, very popular way of engaging with markets. However, you need to know what you're doing. You need to be prepared. You need to understand what is happening and what is occurring. And this just reinforces the kind of comments we just made a few moments ago about understanding the economic calendar and understanding when that major data is coming out, because that is crucial to being able to operate effectively. When it comes to trading the news, you first have to know which releases are actually expected that week. And so, as I said, the ActivTrades has an economic calendar. There's a link there. It's not difficult to find. If you look on the ActivTrades website under Learn to Trade, you'll see analysis. You'll see economic calendar that actually you can access and can help you. You will also find on the ActivTrades website, there is great insight, on the upcoming news events. They've got a great team of analysts who are constantly putting out great data on a weekly or daily basis based upon how busy, the economic calendar is. And so, I advise you that to make sure that you're aware of that data, you're aware of the kind of the fantastic analysis that you can get from the ActivTrades team, and you're able to sort of, as a client, link into that and access that, and I recommend that you do so. As I said, you want to be forewarned, and you want to be prepared for what the week holds. And so that is one of the many things that lots of perhaps new traders don't do. Is they might know that, for example, the first Friday of the month is normally the non-farm payrolls number. They'll normally come out around about what it'd be a sort of 8:30 in the US, sort of 1:30 in the UK, 2:30 in Central Europe, and so once they know the news comes out, they think that's all they need to do. Whereas actually spending a little bit of time just preparing beforehand can help you enormously, and I'll talk more about that in a slide or two's time. It would be interesting to know, of those of you joining us here today for the live session, how many of you presently trade news events? It'd be interesting to know what, if any, experience you have. Maybe it's something that you've done, or maybe it's something that is part of your trading plan. Maybe it's something that you're interested in, but you've never really understood how to do it. That's absolutely fine. You can just put it in the chat box, what if any experience you may have had, because it's always interesting to hear what other traders have made of trading news events. So Simon says, I trade news events, but only big deviations, but I do plan for every major news event. Okay, excellent. That's a good start, Simon. It's a good start. Thank you for sharing that. That's good to know. So for our own session today about trading news, what we're going to focus on is we'll just focus on FX markets today. That's not to say what I share with you will not work on others, and there are examples of that. Deeper into the slideshow, but we're just going to focus primarily on FX markets today. And what we'll also do is we'll only look to trade tier one news events. Now, what does that mean? How does that show up on the economic calendar? Well, a good economic calendar will have pretty much every piece of formal data will be on that economic calendar. And if you looked at that data, well, invariably you would never trade, because it's just a constant stream of economic data. So what we want to do is we want to focus on the high impact, most important tier one news events. And so on an economic calendar, you should be able to align it to your time zone, because I appreciate, whilst I'm here in the UK, we have a truly global audience who join us, and you're all very welcome. It's great to see you here. But you need to align it to your own particular time zone, And also what you want to do is you want to filter out the sort of let's say the less important news. You just want to focus on the highly important, high impact tier one news events. That's what we particularly want to look at. And so an awful lot of them are things like interest rate decisions. So, for example, in the UK this week, as I said, we're going to have the monetary policy report, an interest rate decision. It'll be 12 o'clock London time on Thursday. Things like inflation, and certainly over the last couple of years, the inflation numbers, primarily CPI, okay, over PPI, has been keenly watched, okay, keenly watched and traded by traders, analysts, investors. Also, unemployment numbers, okay, and that will become more interesting, I think, as the year goes on. So when we see Friday's non-farm payrolls, okay, based upon whether that job number is a strong number, is a reflection on the strength of the economy, or whether that number is weaker, will give us an indication that perhaps the economy is starting to wane a bit. In consumer economies, certainly like the UK, things like retail sales numbers, okay, are important because we're such a consumer-driven economy. But then you're also looking at things like industrial production. So, getting towards things like ISM reports, PMI reports. Also that's an indication of business sentiment. Trade balance, and GDP numbers, okay, can be useful and important. As I said, it really does depend upon where we are in the business cycle and the overall economic cycle. And along with that, manufacturing sector surveys, the importance of those tier one news will differ based upon where we are in the cycle. So, as I said, for the last 2 years or so, the inflation numbers have been crucially important, okay, and they have been the real driving elements, all right, looking at that based upon the impact they have on interest rate decisions. Now, in FX markets, interest rate decisions are key, and so they're kind of meetings by central bankers, but it's about, what is it that drives those interest rate decisions? And as I said, for the last couple of years, inflation has been a crucial one, and I suspect what we will start to see is maybe a move back towards looking at unemployment numbers as the rest of the year goes on. As I said, to people get an indication of the strength of the overall economy. So, as a trader, get up the economic calendar, just effectively make sure that you filter out, everything but, filter out everything but the really high-end, high-impact tier one news events. That's what we'll look to focus on to begin with. When it comes to trading the news, if I had to sort of sum it up in one word, that word would be expectations, okay? That would be the single word I'd use to sum up trading the news. And what do I actually mean by that? It is really about how the released news item, how that reflects against the expectations, will make a big difference on how and if this will move that particular market. This can be what induces the volatility. And as I said, the news induces volatility. When you're on the right side of it, well, that makes trading, fantastic. When you're on the wrong side of it, that's what can make trading challenging. And that's what we need to understand. And as I said, it is about what are the expectations for the news number before it's released, and how does the actual news release reflect against the pre-news expectations? The bigger the divergence, if at all, sometimes there isn't, but if there is a divergence between the expectations and the actual news, and that divergence is considerable, that is what will induce the volatility that can make for interesting trading sessions. Should we just say it that? And it's and this is my personal views. This would just be it's a reflection upon life. Okay, some people might say that all of life is really just about managing expectations. People like nice surprises. People do not like bad surprises, and that's the same with economic news. If you get bad news, in your personal life, you generally tend to react to it, in a different way than if you've got a good news piece, a good news surprise in your personal life. And that's the same markets. Remember, those markets are a reflection of human psychology. And so When the news comes in at the same level as what is expected, well, it's rare that you get, major moves or major volatility. But if there is a big difference, that is where the volatility comes in. And that's what we want to know, we want to understand. And we want to see how can we use that, all right? How can we turn that from being a challenge into creating a trading opportunity for us? So, as we were just saying, news events, they can be volatile and they can be dangerous, okay, for uneducated traders. But that is why ActivTrades provides the Monday Market Matters, okay, education material to help educate you to understand, what's required to be able to deal with, trading various different market regimes and to do so effectively. My personal view, is do not bother trying to predict news moves or enter immediately at the news release. You will find many traders who like to do that, but I personally don't think that's a smart way to operate. You'll find lots of analysts trying to predict the news, okay, and how the market moves on the news. And once again, I don't think that is a really effective use of time, energy, and resources, because as we've just talked about, a lot of it can be to do with expectations. And if the market news is different from expectations, that volatility means that the market can react in different ways. My view here is that what you should do is you should wait for the news to be announced and then allow that initial volatility to subside and then look to trade a breakout in what could be the new post-news direction. That would be my suggestion of the way to operate. So how do we actually do that? How do you turn a concept into an actual trading plan, something that you can actually work with time after time after time? That's what we want to be able to work with and share here. So what we can do is, we can start to have a little checklist to follow to help you make sure that you're doing the right things to be able to trade news effectively. So as you've heard me go on, all right, earlier on in our session today, make sure you check the economic calendar for the high impact news for that coming week, but also for that coming day and that coming session, if you're an intraday trader sitting down in front. What I also suggest, if you're trading FX, is to choose FX pairs that reflect the news. So, for example, this coming Thursday is the Bank of England Monetary Policy Committee meeting, okay? So you would be far better looking to analyse and trade GBP sterling news, okay? Or rather GBP sterling pairs for GBP sterling news. Trying to trade something like the Aussie dollar against the Japanese yen for GBP news, it's not really a smart or effective way to do it. Let's keep it nice and simple, all right? If you're going to be trading American news, well, you probably want to have an interest in the US dollar as one of your pairs. If you're going to be trading Euro news, well, then you want to be trading Euro pairs. If you're going to be trading Japanese news, you trade Japanese pairs, or if you're trading Aussie news, for example, you want to trade Australian pairs. That might seem very, very simple and straightforward, but you'd be surprised how many people forget that, okay, in the height of excitement of trading news. So choose the FX pairs that reflect the news that you're looking to trade. I personally like to look on the 5-minute chart, but I admit will also look up and down. So I will look down to the 1-minute chart. I'll also look up to the 15-minute and 30-minute, but primarily just look to trade the 5-minute charts. I have a pretty much a standard chart setup, okay? I don't personally have anything on it particularly different for trading news rather than I would have normally. Normally, you will see on my charts, okay, I'll have a blue 20 period, a red 50 and a green 200 period moving averages and fractals, and that's really about it. What can also be useful is to also have a 10-period ATR on the 5-minute can sometimes be helpful, the average true range. And this can just sometimes help when it comes to understanding risk and doing position sizing, etc. But we want our charts to be quite simple, all right? Markets will be volatile, markets will be moving fast. Having too much in your charts generally just tends to lead to analysis by paralysis, and that's not what we're looking for. We're looking to keep it simple so we can operate effectively. So, as I said, wait for the news to be announced. Do not try to preempt the news. Do not try to trade at the actual news. Okay, so as I said, let's say the UK monetary policy news will come out at midday on Thursday, midday UK time on Thursday. Trying to trade at midday, okay, it would probably be quite challenging because there'll be an awful lot of volatility. Instead, watch how the markets react. All right, watch how the markets react. Remember, we talked about its difference between expectations and reality. Personally, what I like to see is a strong move in any direction. Okay, a strong move in any direction, but also take this on board. Very often, not always, not 100% of the time, but very often, the first move can be the false move. So I've just got a little example here, just on this chart. Let me just bring up the drawing tool. Excuse me, bit of hay fever there. What we can see here is, this was a period when there was like two elements of news here. You can probably see by the big candles. Here was one, okay. And actually what we're looking for is, okay, as the news went, you can see that basically the candles were large. There was a great deal, okay, volatility. You can see the size of the normal candles here, not very big. And so you can identify, when the news came out, because that's where we got the volatility in. And if, we've had the news here, well, you can see price punched its way up. But then actually, as I said, very often, not always, but very often, the first move can be the false move. And once that false move has run out of energy, well, then there might well be an opportunity to basically to trade in the real longer term direction. And that's what we're looking to try and capture a piece of. Okay, and that's what we're looking to do. And we'll talk more about that in a few moments' time. So here is what we look to do. Let's get it all drawn to. Watch the 5-minute pass, okay? Watch on the 5-minute charts until the market forms a tight range of 3 bars. And that's what you can see in this blue box here. So why are we interested in that? What happens? Well, what we very often see is markets will surge, and then invariably they'll rest, okay? And then they'll surge again, either up or they'll reverse, okay? Markets, like humans, we surge, then we rest, then we surge again. That's what we're looking for: surge, rest, surge. And what we're looking to do is, let me just clear these drawings down, is remember what I just said in the previous slide, is that very often, the first move can be the false move. So what we're looking to do here is price makes its first move, and then basically it surges and then it rests, and then we're looking to capture the next surge. But because A, we know very often the first move is the false move. B, we start to see the market rest when effectively the range starts to tighten up. We've gone from a kind of a range expansion, okay, to range contraction, and then we're looking for range expansion again. So what we're looking to do is to identify what's very often known as a 3-bar breakout. So we've got 3 candles where the range starts to tighten up, and it is a breakout of that range that is what we are looking for to give us our indication. Okay, and remember what I was saying. Personally, I prefer a move against the first news. Remember, very often the first move can be the false move. All right, just take that on board. So I would hope that, just from what we've talked about there, just hoping you can understand what we're looking for, what we're trying to achieve, how we're trying to work, and what we can do in terms of just being able to have a simple plan, all right, that we could use to trade any particular major news event. Now, as I said, we're focusing on FX today, but the concept would work if you were trading silver, gold, indices, stocks, etc. That's what I like to share, concepts which are time frame and instrument agnostic. But today I'm going to focus mostly on FX because that's pretty much mostly what I prefer to trade. Here is another useful thing that will help advanced traders, that very often the price action within those 3 bars will also provide an indication of likely direction. Remember, first news is very often the false move. So in this particular case here, you can see Bosch price moved up strongly. But then if you look at these three candles, and if you know your price action candles, here you have, that is a hammer rejection candle. And then you've got the third candle. This is now printed what is known as an evening star. Okay, that's an evening star formation. If you're new to trading and not really sure what that is, go on to the ActivTrades webinar archive. You'll find it on both the ActivTrades website, but also on the ActivTrades YouTube channel. And I have done pieces before on a star formation, so you can learn from what they are. But actually, that is also a star formation, which in itself, an evening star formation, is a bearish signal. Okay, so we've got the move, we've got the rest. Okay, we've got the price action tightening up, but we've also got the price action giving us an indication of where it's more likely to move. Okay, for the next few periods, and all of that helps. It gives us a confluence of events, and that's what we're particularly interested in looking for. So, what we'd be looking for is our trade to enter on the break of the range, okay, and our stop loss be the other side of that 3-bar range. That's to begin with, okay. That is our opening position in terms of where our entry is and where our stop loss would go. And then we look for our next part of the trade plan. If the trade's triggered, once the first 5-minute bar has completed, you move your stop behind that bar and leave it there, okay? This is there to reduce the trade risk, and so you'll hear me call this the FBS, the first bar stop, okay? So what we see here is that, in this particular example, you can probably see where the news came out. Price launched itself higher, didn't it? And then actually what started to happen is that we started to get bang, the price started to go sideways, price started to consolidate. We've gone from the surge into the rest, looking for the surge again. Remember what we said, we've got a 3-bar breakout. Once we trade, okay, we trade the breakout of that candle. Our initial stop is above the high of the range, and then the first candle, once that completes, right? Once that candle completes, then we move our stop loss from our initial position to the first bar stop, okay? And this whole idea is to basically, it reduces the trade risk. So if the trade works the way like we would look for, that means we've reduced our trade risk and we're able to sort of ride our trade. But if there is still volatility and we get flashed out, it just means that we have managed to reduce our overall risk, okay? And that's fine. As a trader, your job is all about managing risk. As a trader, your job is to take small losses. Okay, that's your job. It's not to find big winning trades. Your job is to manage risk. Day after day after day. So once that has occurred, and once we've moved our first bar stop, so the first bar after we've triggered, okay, leave your stop loss at the first bar stop until either the trade stops out or it hits target. As I said, this way I'm always reducing my risk, my R, on each and every trade, and that's what I'm looking to do. Remember, it's a volatile environment, so the markets can, as I said, move quite considerably, and so what I always want to be doing is to just basically mitigating my risk so that I'm in a position to take either a small loss or a good asymmetric win. Targeting, okay, we've looked at risk management, we've looked where our stop loss placement is and how we move our stop loss. So the other side of that is the reward in terms of targeting. What do we need to do with regards to targeting? Personally, I look to use fib extensions, okay, of the 3-bar range for my target. That is not perfect, okay, but what it is it's consistent, and I will always pick, when it comes to trading, especially intraday trading, I will always pick consistency over perfection, because there is no perfection, okay, in trading. There is no perfection. It is about what can I do consistently, trade after trade after trade after trade, okay. That's what we're looking for. So I will, base my target on the average true range and the fib extensions, okay. And why did I take the ATR into consideration? Because if the 3-bar range, if the range here, if we can look here, let's just look at this example. This is, we can see where the news came out and the news pushed, okay. And then what happened is we created a small 3-bar range there, you can see, and then we broke out of that, okay? And then remember, we would be getting long here, stop here, and then moving that to the first bar stop. But what we want to do is, if this range here, if this 3-bar breakout, if it is much bigger than the average 2 range of that period, well, then I will aim for the 261, okay, 261 target rather than the 423 fib expansion, okay? So what I'm doing is I'm just being aware of, the range, okay, the amount of volatility, and utilizing that to help me with trading in alignment with the way the actual market is playing out at the moment. So hopefully, I would hope people would understand that. If not, by all means, you can ask a question. I'll help as and if I can. But as I said, once I've identified that 3-bar range, I would use my fib tool to identify where fib extensions, namely 261 and 423 in particular. If it is a small range, I'm very happy to try and run for the 423. If the range of that 3-bar is a little bit bigger than the ATR would suggest, well, then my target would be a little bit tighter, okay? Because the bigger the range, the further it would have to move, and that might just not be a sensible place to have my target, okay? So I'm just taking into account the volatility in the market at that time. So, as I was just saying there, if it's a larger range than the ATR, well, then I would be looking for the 261. But if it is a small range, I will usually look for the 423 fib extension, okay, for my target. And the good thing about that is that, including spreads and some slippage, which can always happen around trading volatile periods, this provides me the opportunity with about a 2.3 to 3.3 reward to risk, okay? And that suits me very nicely because I'm always looking for asymmetric reward to risk. That's what I'm always looking for, asymmetric reward to risk. That's what we look for. However, I do appreciate that some people, might just want it to make it even simpler. And so, my suggestion would be that, if you're utilizing this and you just want a simple target, well, then, identify the range, okay, that you're trading the breakout of, and then just set a 3-to-1 reward to risk target, okay? And, as I said, some people just might prefer it to be much, much simpler and to let it run like that. And that's absolutely fine, okay? Remember what I said earlier. It's not about perfection, it's about consistency, okay? Which method, which plan can I follow trade after trade after trade after trade, which makes it easier for me to be able to just trade consistently, session after session. Also, I appreciate some people love trailing stops, okay? Some people love trailing stops. So, a third option for those of you who particularly like trailing stops is just to use a 3-bar trailing stop, okay? What does that mean? Well, if we look at here you can see where the range is. We get a really big opening range. We closed here and then basically price came down, and then what we can see is that actually we had those three candles there. That was our 3-bar breakout, which we traded. Okay, our initial stop was above the high, which then moved to here. Then effectively every time a candle closed, you basically look at that candle and the 2 before it, and then you trail your stop amongst the after the high of the last 3 candles. Every time the candle closes, that's what we would do until your trade was stopped out. Okay, so when it comes to, as I said, managing profitable trades, everybody wants to squeeze the last pip out of the trade, but the reality is that is very difficult to achieve. Okay, you're never going to do that. Okay, once again, as I said, just pick a simple way that you can consistently follow trade after trade after trade. That is what will help you better than anything. There is no perfection. What can I trade? What's the easiest plan for me to follow? So I've just got some examples here. Okay, euro dollar, NFP. You can see how the news comes up. Okay, and then basically, first move is the false move. It then comes back, and then we create a small 3-bar range there, and we break out of that, and bosh, off we go. That's what we're particularly looking for. Okay, surge, rest, surge again. That's all we're doing. No, we're not trying to be smart Alex. Okay, we're just trying to work with what the market's telling us. Yeah, and you can see the data there. Okay, of the ATR at that time was 11. The range of the 3-bar breakout was 11, so that makes the 423 target valid, and so it hit the 423 for plus 34. So we're risking 11 to make 34. Okay, so that's just a little bit over. It's just about 3 to 1. Okay, so nice target. Okay, nice work, and it just basically played out there quite nicely, nice and simple. There's no need for us to make it more complicated than it needs to be. Also, if you had wanted to use the 3-bar trailing stop, you'd have been in the trade for 40 minutes, you'd have moved your stop loss 4 times, and you'd been taken out for actually plus 17. So this is the difference between using a target and using a trailing stop. Sometimes the target will generate better outcomes for you. Sometimes the trailing stop. The challenge is you don't know which way it will be. As I said, I personally prefer just to use targets. I'm an ex-military guy. Okay, we love to hit a target. It makes it nice and simple. It also means that I can set and forget. Okay, I can, once I've moved my first bar stop, I could just let the trade play out. All right. So if I have to go away and do things, or if I can't focus, etc., I've got other things going on, it allows me to do that. Other people, they love to trail their stops. So, there are options there for you. It depends upon which one can you follow easiest. Another example of this is Kiwi dollar on non-farm payrolls. Hopefully you can see kind of big thrusting move up, okay, when the news is announced, and and look at the size of those candles compared to the normal 5-minute candles. And you can see Bosch pushes all the way up, comes the way back in, and then we get our small 3-bar range, don't we? Small 3-bar range. At the time, okay, the average true range, okay, is 9, but the range of the 3-bar breakout is bigger than that. It's 12, all right? So because the 3-bar range is bigger than the average true range, well, that way, I'm expecting only to go for a smaller target. So I'm using the 261 target, which is down here, as you can see. And actually what happens is we hit the 261 fib expansion target for plus 19 pips. Okay, so we're risking 12 to make 19. So it is a smaller, it's a smaller victory, but it isn't, it's still an asymmetric reward to risk. Okay, nice and simple. In this particular case, okay, if you'd have used the 3-bar trailing stop, once again, you'd have been in the trade for 40 minutes, you'd have had 4 stop loss moves, and you'd have been taken out for plus 8 points, okay? So, yes, you'd have had a successful trade, but you wouldn't have generated the return from using the 261 target. And as I said, it's very much, sometimes the target will work better, sometimes trailing will work better. There is no perfection. Which one can you find? Which one is the easiest one for you to follow? So I've got a couple more examples here just to share with you. Okay, so what you'll see is it's a blue or a red box to show that the 3-bar breakout candle, its setup was triggered. If it was blue, that means it was successful. If it was red, it meant that the trade failed, and that's fine. No trade setup is perfection. What we're looking at is fib levels, using the 423 target, and sometimes you might see what I would do as a re-attack, as if the first trade has failed because maybe there's just still too much volatility, well then look at how I would re-engage on that. So here's an example here. This was pound against New Zealand dollar on the 5-minute news. You can see, where we've had the volatility. Okay, let's get the old pen out. And actually, Bosch, we can see where the move goes. And then actually it creates this tighter 3-bar, okay? This tighter 3-bar, and actually it looks like it blows out to the top. Now, if you remember what we're really looking for is if the first move is the false move, we're expecting the actual move to come back. So in terms of it failing, it didn't actually trigger because we were expecting it actually to short. But what we do is, if it doesn't work, what you do is you just keep ticking forward. Keep ticking forward until you do get a range. Okay, in this case, this is a range. Okay, that remember we're looking first moves the false move, so we have a bias to the short side. In this case, well, they're actually we trigger ourselves in. That was actually this candle, and so of course our stop loss is above here to begin with, but then it moves to our first bar stop. Okay, this candle did go beneath it just a little bit by it was, I think it just a 0.2 of a pip, not enough to actually trigger me into the trade. It was the next candle that triggered me in. But as you can see, we went our way down to the 423 because it was a smaller, tighter range than the average true range. Okay, so I've got just a few examples here just to show, there's never perfection. You're always having to trade what you see in front of you. Pound against the yen on the 5-minute chart. I'm hoping that you're starting to recognise and see, you get the big volatility of the move, and then invariably you get surge, then we get rest, and then we're looking for the surge again, aren't we? And that's the way we work. Surge, rest, surge. That's what we're looking for. Okay, keep it nice and nice and simple. This was a pound against dollar. Okay, this was a kind of a bigger move. This was actually, I took this on the 15-minute chart because actually we set up one which didn't trigger, and then basically we went lower before we reversed and moved our way up onto and as you can see, we had the surge, the rest, okay, tight range, breakout, first bar stop, and then move to the 423 target. That's what we're looking for. Euro against Aussie here. You can see where the news comes out. Price spikes up, and then we put in, there's a 3-bar range there. We can see there's lots of wicks, isn't there, as well? So, that is helping us build a picture that the price wants to go lower. And as we can see, price does goes lower and actually goes quite nicely to that 423 target there. I wish they were all as clean and easy as that. Sometimes they're not, but it's nice when they do. Examples here, Euro yen. News, okay, the news comes out, news drops us, and then we go into a tight range. You see a tight range, we're expecting a bullish move, and then we're triggered in, and off we go up to the 423. So just very simple: surge, rest, surge. That's all we're looking to try and achieve. Euro yen again, okay, just basically you can see the big candles for the news. Price pops up, as I said, the big candles, they stand out compared to the normal candles. And then invariably we get a 3-bar range, which is also giving an indication that we want to go lower. Because remember, the first move is often the false move, and that's it, and away it goes. And in this particular case, if you had been using the 3-bar trailing stop, you would have gone much further than the 423 target. Okay, it went much further. And as I said, there is no perfection. It's about which one can you follow easiest. Okay, trade after trade. Pound against yen, 5-minute chart. You can see where the candles have blown out. Bosh, there it goes. And then invariably what happens is, we work our way until we get a range which is triggered. Okay, range which is triggered, and then actually it works its way down to the 423 eventually. Okay, price can sometimes be a bit scruffy. That's what happens with volatility. But as I said, first move's the false move, and then surge, rest, surge back in the direction we came from, and that's what we see. Pound against Swiss franc, 5-minute chart. We can see price pops up after news, big volatility, then it puts in that evening star formation, which gets triggered, and then we basically watch it trade all the way back down to the 423. That's, as I said, nice and simple. Nothing terribly special, nothing terribly esoteric. Okay, just a simple plan that is clear, unambiguous, and you're able to follow. That's what you want when you come to trading news. And DAX. Okay, as I said, we're mostly focused on FX, but the concept works the same. The news has pushed us down. Then we've got our 3-bar breakout. Okay, 3-bar, the range, tight range, and off it goes. And then it goes much further, but we've still got good reward to risk on the trade we're looking for. Pound against dollar, 5-minute chart. Here we go. You can see news. Price drops. Price pulls back, price goes into a tight range, and then it breaks out of that, and away it works its way up to the 423 fib extension. That's what we look for. So there you go. We covered quite a bit on that. Okay, so remember, Money Market Matters is here to support you in 2024. Normally, every Monday will be back from September. News, education, active trades, tools, and markets. I've said this all along, it's going to be an interesting year in markets, so hopefully you'll join us to enjoy that journey. As we've discussed today, Many traders are attracted to trading news events, but it's important to know what are the major news events coming up for that day and that week ahead. You should stick to trading only tier 1 high impact news events. It's rarely effective to try and predict what will happen in front of the news. Okay, it is not as easy as people think that will be. What's more important is to see how the news release is compared to the expectations, because it is that difference between the reality and the expectations that's what induces the volatility. And volatility, though, is a double-edged sword. The method we've talked about here today is just basically using a simple 3-bar breakout on consolidation post the news events. Nice and simple, all right? Nothing quite mechanical, nothing too difficult at all. So we've got a couple of minutes left. Why don't we have a little look over on the live markets and see how the markets are setting up to begin today? As I said, Monday Market Matters, our session will return on Monday, 2nd of September. But in the meantime, I appreciate that you might want to be able to avail yourself of, interesting insight and data and be able to watch previous. If you're not doing so already, I would suggest that you follow ActivTrades on YouTube, okay? You can just basically search on YouTube for ActivTrades. You can subscribe, okay? Make sure you press the bell. What you will also see is that all of my previous Monday Market Matters webinars are on there, so you can follow that, you can watch them. You'll find them useful if you need to just, increase your education over this summer period. So, just bear with me. What we're going to do is we're going to switch across to the chart for the last couple of minutes just to finish off. But as always, if you've got questions or comments or thoughts, by all means, you can send that to email englishdesk@activetrades.com if you've got a particular consideration or if there's something you'd like to see me cover in the future. Then by all means do so, and we'll happily try and help you as we can. So, if you just bear with me for a moment, I'm just going to switch across to the live chart and we'll see how the markets have opened up this week. So I'm hoping you can still hear me, and I'm hoping that you can see the charts here. Okay, ActivTrades platform. This is my US indices. So here we've got, this is the Dow, this is the Nasdaq, this is the S&P 500, and this is the Russell. Nasdaq. Lots of people like trading the Nasdaq, don't they? Let's just what we can see is the daily chart was on a fantastic trend until it wasn't. We had a real bearish key reversal there, which then tried to push up and it's fallen away. So, we've had a real sort of kind of retrace there, real pullback, but it looks like maybe there's a little bit of a reaction to that over the last day or so. I'm just looking at the 4-hour charts there, bang, and I'm just looking here for just getting ready for my trading week here, just making sure, just looking at what have been kind of the highs and lows of the session so far. If we go down into 15 minutes, so interestingly, we had a little bit of a bounce beforehand, but I'm just looking at, here we can see the market news there, and no surprise there that actually we've popped up to the recent high there. We popped up to the recent high, and we just kind of rejected it. Remember what I kind of say is that is that the first 15 minutes, okay, I tend to just let the market do its thing. It can be very volatile. Just don't try and fight it that way. What we can see here is when we open this, the 5-minute chart, we push down to the kind of the low of the day. Pushed it, rejected it, pushed up to the high of the day, up and rejected it there. Okay, let's have a little look at this on the 1-minute chart. I'm just interested. I'm always interested to sort of, just look at the 15-minute opening range as well, just to that can give us ideas of where price might go. But if I go down to the 5-minute chart and the 1-minute chart, I'm hoping you can see that, we opened, okay, we pushed lower, we pushed up, we pushed to the previous high there, the day's high, and then we've come away off that ourselves there. Just looking at that, seeing how's that playing out. Interestingly, we're in the middle of that range now. I would, if we get above and close above that, well, then that would be very bullish. I would be just looking to see, does that, can that keep that up there? Can that keep that up, or will that particularly roll over? We'll watch that. Okay, as we go into what is here, the 3 o'clock on the Nasdaq. Okay, 3 o'clock or 10 o'clock Eastern time. Look at see how does it. Can it break above then start trending upwards, or does it fail again? And if I look at the Dow in a similar way, okay, boom, boom, boom. Right, so we can see what had been the low of the day there. We've already traded through that there. We've also had, bang, that was the high of the day so far. And go down to look at the 15-minute range here. That was a very big, you've got the kind of 15-minute opening range was once again, just I'm not drawing these on as well as I could do. 5 minutes chart, okay, so we can see, as I said, we just fell down there, kind of putting a double bottom there, haven't we? The 5 minute chart is a double bottom there. Well, let's go to the 1 minute chart. You know, the 1 minute chart even looks even nicer as a double bottom. You know, we came and tapped it, and tapped that way, and I'll be looking to see, right, does that double bottom have what it takes? Has to get above the 50 there. If it can get above the 50, well, then I actually start to get interested in thinking maybe it'll follow the Dow, and maybe it'll rally its way up to the kind of to those highs of the day so far. That's quite a turnaround. It's a bit, as I said, Monday can be sometimes a bit of a mix. You can see, you know, I like to see them all operating together, but as you can see, you know, the Dow is moving down and maybe bouncing up, whereas the Nasdaq is kind of has moved down, moved up a bit, and I wonder if it's going to, just like an ABCD pattern, continue that and stuff. Let's see what the other two are doing just before we finish up. Give us some indication. S&P 500, was that doing 30-minute chart? Kind of, once again, as you can see, they're a bit, there we go, a bit messy. How it came to traded through the low of the day so far. That's what one was interested in. 15-minute, 15-minute opening range. I'm interested in that. Excuse my drawing. I'm just trying to do this quicker than I would be normally. And go down to the 5 minute chart. We can see it bounced off the low of the day, didn't it? And it's rallying higher off that. Yeah, the 1 minute chart bounced off the low of the day. It's a double bottom, which then basically has worked its way up there. So I would suggest they're all bullish. There we go. Nasdaq is kind of breaking that high. That's what Nasdaq's leading the way, I'd suggest at the moment. That's what I'd be looking at. So Nasdaq leading the way. Does it have enough to turn that from resistance into support? That's why I'll be watching for the next few minutes. Does it break it, or does it become a false breakout? That's what I'll be watching there. Okay, that's where my focus would be. Okay, ladies and gentlemen, as they say, time flies when you're having fun. All right, and unfortunately, we've run out of our time today. I hope you found that useful. I hope that's given you a little bit of insight into how you could trade the news. Take it away, study it, okay? Utilize it, have a little look at how that works in your news. As I said, we've got an awful lot of big news coming out this week ahead you can look at. So be sure to take a lot of that and make sure you're on top of the economic calendar. As always, I hope you have a fantastic trading week, but also I hope you have a fantastic trading summer. Okay, remember, we will be away now throughout August on the Money Market Matters, but we'll be back Monday, 2nd of September. I hope that you will join us then. And until such time, trade well, everybody. Trade well. Thanks very much. Cheers.